Why is it that despite working hard, you're losing what you have little by little? You contribute to the economy every single day, right? But somehow, the more you do, the less you have. Most people will tell you it's your fault. You need to work harder. You need to get another side hustle. You need to sacrifice more. But what if it isn't your fault at all? What if there's something built into the way the economy works today that's quietly tilting the game against you? By the end of this video, you'll understand exactly why your hard work isn't paying off the way it should, and what you can do right now to change it. My name is Paddy Kelly, and I'm a financial consultant and economics professor. And in this video, I'm going to show you what it looks like to lose what you have little by little, why it's happening to you, and what you can do about it in just a couple of steps. So this is what it looks like to lose what you have little by little. As I sit here talking to you, if you can't afford a home, if you can't afford to have children, to have an education, or to even just cover weekly groceries and decent healthcare, then trust me, you're not alone. No matter your creed or country, everyone is feeling it. If you think about it, these days we have an oversupply of wants, right? You can eat out pretty much whenever you want. You can buy the latest technology. You can even have a new wardrobe every season, right? Wants are easy to access, they're cheap, and they're endless. But at the same time, most people can't afford what used to be considered essential for a good life. Education, children, a house they can call their own. You know, a house used to cost about 2.5 times your salary. Now it costs 6 times your salary, and actually 9 times your salary if you live in the UK. Raising a child is about 3 times more expensive than it was when I was growing up, when I was a kid. And the average student loan now is about 7 times greater than it was just a few decades ago. The truth is, wants have become cheap and accessible, and necessities have become expensive and out of reach. And I bet if you just think about it, the likelihood is that you're feeling that, and that you see it in your day-to-day life. Now listen, this didn't happen overnight. This has been happening bit by bit, year by year, over decades. The value of your labor, the value of your money has been eroding in real time. I'm over 40, so I've lived some of these big crashes, right? In 2000, 2008, and 2020. But the truth is, it's not these big crashes that have caused this to happen. It's what's happening between them. The slow bleed, the thing that nobody really talks about. The markets would crash and then bounce back, and the news would call it a recovery. But for most people, nothing recovered. The numbers went up, stocks, house prices, corporate profits, but nothing really changed for the better for most people. In fact, it might have even got worse. That's the real story here, not the crashes, but the slow leaks between these crashes that have been draining people for years. So how did it get this way? Why is it happening to you? To really understand what's happening today, let me give you a quick example. So imagine a company you work for increased their profits by 10%, right? And they pass on half of that to their workers. So your salary goes up by 5%. That's great, but it's not the full story. We also need to see your costs, because you've only truly made 5% if your costs also haven't risen as well. Inflation is basically the rise of price of the goods and services that make up your life. In other words, it's the cost of living. So let's say that stands at 2%. Well, that means then your real income, the difference between your rise in salary and your rise in costs, is 3%. Now, 3% is less than 5%, but it's positive, it's good. And yeah, you made more this year than you did last year. Life is okay. But that's not actually how it works anymore. So let's take the same company, the same profits, right? But in this case, they don't pass on 5%, they pass on 1%. Inflation, which is your cost of living, still remains at 2%. In this scenario, in fact, you're making minus 1%. You can no longer afford the life you could from last year. Starting in the early 80s, this is exactly what started to happen. Owners started to take a higher percentage of the economic pie. And the more they took, the less there was there for workers. And over time, that gap grew so large that in fact, productivity was decoupled from wages, which basically means that just now, because productivity goes up, doesn't mean your salary will. And it's not hard to see, right? Companies have never been wealthier. Profits have never been higher. The stock market has never hit such peaks. Yet most people, just like you, are struggling to pay for the essentials, the basics. The math is very simple. The more that owners take, the less there is for employees, and inflation just eats up the rest. In real terms, the average person today earns about the same or even less than someone 40 years ago. Think about that for a second. It's insane. This is a quiet economic collapse. And the hardest thing is that most people think the system's working fine. But it's not. And if you want to stop losing what you have little by little, then you need to reposition yourself from an employee to an employer, from a worker to an owner. So here's exactly what you can do about it. So let me explain what I mean by that. Basically, for decades, owners have been taking more and more of the economic pie, more and more of the profits, more and more of the revenue. Companies have got more efficient, workers have got more productive, and technology has made everything cheaper and faster. But the results of this progress has only gone to the people who own things, to shareholders, property investors, business founders. And meanwhile, employees have seen their fair share of the economic pie shrink. To change that, you have to shift how you think about money. You have to start owning things that go up in value. You need to own assets. You need to get stocks, property, land, IP, digital assets, whatever it is, something that earns for you when you're not actively working. Because if you're not an owner, then in some ways you're always on the wrong side of the equation. When prices go up, owners make money, workers suffer. So you need to reposition yourself from being a worker in the system to an owner of the system. And here's how you can do that in a couple of steps. So the first step is you want to maximize your income so you have money to invest. And you can do this through what's called wage arbitrage. One thing that people often don't realize is that two people doing the exact same job can get paid very differently for it, just depending on who they do it for. There's actually so much wage arbitrage out there. A lot of this comes down to the obvious things like the size of the company or where the company is situated. But often it's also just a timing thing. When you started, how in demand those skills were, and how good you were at negotiating. Either way, there's a lot of wage arbitrage out there. Two people with the same title, doing the same job, can earn very different paychecks. Sometimes in the hundreds, sometimes in the thousands of dollars. So the first thing you can do is to just look for another job. Check out your value in the labor market. And the second you find something that pays more, change. When you do that, that means that you're maximizing your income as an employee. And it means you have excess money to invest, excess money to buy assets, to become an owner. And the second step then is just to become an owner, to buy assets, to buy ownership in the economy. Now, investing can be as easy or complicated as you want to make it. If you want to maximize your returns to the 100th degree, then yeah, this will take years of your life, thousands and thousands of hours. But if you just simply want to own a piece of the economy, well, there's a straightforward, simple process, a simple way of doing that. The stock market basically represents the economy because it's made up of all the companies that you, your friends, your family, it's where you buy your stuff from. So to become an owner of the economy, you need to become an owner of stocks. Now, the best way to start doing that is to invest in index funds, because index funds are a diversified portfolio of all the stocks in the economy. Individual companies go bust all the time, but over time, markets go up. And so if you invest in an index fund, you're basically investing in a market. This is basically the safer option because it allows you to own a piece of the economy without having to buy individual stocks. So look, just do a bit of research in index funds, pick a provider, and start investing what you can. When you start acting and thinking like an owner, things change. Because every time you invest, whether it just be a few dollars or a lump sum investment, whatever it is, it doesn't matter. Then all of a sudden you start to share in the economic's growth rather than being drained by it. The more you do, the more frequent you can do it, the more money you can invest, and the longer you can stay in the markets, the more that growth compounds and the safer it is. It's not about timing the market or getting rich overnight. It's about simply growing your wealth over time. Listen, to summarize, working harder won't fix this losing feeling, but owning assets will. So find out your true value in the labor market, maximize your income, and then use that excess money to start owning assets. Over time, you'll shift from losing what you have little by little each year to actually building wealth over time.